Hi, this is Mike, and this is a longer version of the product demo for people who are interested in the tool and just want to get a little bit more information. I'm going to go through this relatively quickly, but feel free to reach out to me and to send me an email if you will have further questions or you want a personal demo. I'm going to talk through the system in terms of the different menu options. So when you log into the system via the website, you'll get to see this menu options. And I'm going to start with my data series. So my data series is the part of the program where you can access the data directly. You can keep a list of products that you're interested in. If you want to add one in, you can simply say, well, I'm interested in polyvinyl chloride. Well, I'm not interested in Africa, but I'm interested in Europe. I want to track it in euros or in euros. So I'll add it to the list. It'll be in the list. You can of course click on it and see the data trend with the prices below. And if you click on my data series, you can also either filter the list. So if you're interested in PVC, you type PVC and it will come up, or you can download the data. You have to indicate the date range that you're interested in, kind of a from to kind of structure. You can indicate either a single series or all of them, and you can download into a CSV file, which then is easily loaded into Power BI or whatever other tools you use. In terms of the data that we collect, I'll talk about two more things. First of all, for every data series, we include an outlook. We include an outlook based on market futures, market trends, economic indicators. We try and take a view on demand and supply in that case. It's the best case estimate. Forecast is only accurate today. Tomorrow it can be completely different, but it is included for all our data series, kind of an objective outlook. The second question we get asked a lot is where does the data come from that we present? So we collect by and large data that is publicly available. And I think what you have to imagine is dedicated a single person to collect data for you, let's say acetic acid, and set them all day to look at all the different data sources on acetic acid pricing, what could they come up with? And that's effectively what we do. We have a team of people that looks at data trends and collects that information. We correlate that information, look for different sources. We collect structured and unstructured data sources, and we put together the trend on that basis. And it's a pretty painstaking process. Now, in general, I would say our data is, as a trend indication of the market, is pretty accurate. But if you're making $1, $2, $3 million decisions on purchasing, I think it just makes sense to invest in bigger companies that have direct contact with the market, so they have a very good idea of what contracts are being signed and what spot prices are being paid. I mean, our data is good, but there are companies like ISIS or Mintech that specialize in data, and if your economic incentive is big enough, it makes sense to purchase data that comes directly from the market at any point in time. Now, that's my data series. The system also allows you to load private data series. So if you have data that you track specifically, or data that you need for your analysis, or data that you want to benchmark against, you can load your own data, or you can load your own data. You can either type it in by correcting it, or you can load with a CSV file, so you can load your own data sources. And it's a pretty simple process. The CSV file is just a month and a date. So for example, this is a water-based resin in euros per kilogram that I've loaded. That shows a price trend over a 3-year period. So you can load your own data, and when you load your own data, the first thing to note is that it is obviously not available to anybody else using the system except for you. It's a private data series. And you also have the option to encrypt the data, if that's what you want to do. So there's a little bit on encryption here. You can set an encryption password to encrypt the data. The only thing to note is if you encrypt the data and you forget your encryption password, also we cannot unencrypt the data for you, so that data will stay encrypted and you have to either load it again or take a different action. But we don't have the capability to unencrypt your data if it is encrypted. And it's a tool that we tend not to encourage to use. It works perfectly fine, but we've had people losing their encryption password and then finding all their analysis is not working anymore. But it's an option for you to use. So the private data series is only available to you. There is a third way to get data into the system, and that is to ask us to supply you with particular data series. If you feel something is missing from the system and you would like for us to load it, then we will investigate if that's possible. So that's the data in the system. Now, what can you do with the data? The first topic maybe to look at is an index. And an index is simply an area of the ability to combine different data series into a single index. So for example, if I want to create an index for beverages and I want that to be reported in British pounds, I would set up a header file like this, and then I would simply add benchmarks, let's say data series into it. So I might say, well, add coffee into that index global, 10% of the index will be coffee. Then I will add a T indicator into it, maybe make it 20%. I'll talk a little bit about what the forward and averaging is in a later example. I'll come back to that. I might also want to add oranges or orange juice into it. So that maybe is 5% of the index. And I'll save that. And when I do, the system on the basis of these weights, so the weights do not need to add to 100%, but on the basis of these weights, you will be able to get a weighted average line. So the dark blue line is now a weighted average based on the values you've indicated. So you can see the orange juice line is going up, whereas the coffee and tea lines are closer together. So if we want to edit that and say actually we want to have orange juice is 50% of the index, we simply save that, and you'll see now that the blue line is more closely following the orange juice indicator. And again, you'll see that this also includes an outlook on our best endeavors, and the kind of thing you can use this for is getting a feeling for a category price movement or a product price movement or a feeling of what's going on in the market as a weighted average, not to make your life too complicated, but you can also use it for non-cost purposes. You can use it for economic indicators, you can use it as a outlook tool for where the economy is going to go, etc. Like the different dimensions are built into the product for you to use. And of course then also the data is available. And of course, in the end with my indexes, you can also either filter them, so you can find what you're looking for, or you can download them all into separate files and load them into other systems. I think that is it on indexes. Maybe two other points to notice here. First of all, there's also the ability to make some notes. So if you want to report what happened in 2020, maybe you want to make a note to say that April to June 2020 COVID crisis dip, and you want to save that. So if you want to keep a record of what was going on at a particular given time, you can keep the notes in there, and it sometimes helps if there are strange movements on the chart. If you investigate it, that you keep an eye on that. You can limit the chart to a certain date range if you don't want the whole chart to be visible. So you might say, well, let me start on January 2020 until maybe an outlook of December 23. So now you'll get a shorter part of the chart. And you can also say, well, you can maybe add oil prices into the chart. So palm oil, if that's what you're interested in. So now you're also showing the palm oil line on the chart as an additional bit of information. It's not included in the index itself, but it's there and it's visible for you if you want to have it included. So it gives you a little bit more room to make the chart more meaningful for you. So that is my indexes. Now, my benchmarks, and this is the most complicated part of the topic, so maybe I'll quickly take a few minutes out to explain the theory behind my benchmarks. So if you look at the price evolution over time, prices will go up and down over time, and that's relatively intuitive. And in the absence of anything else to look at, we tend to think of prices going down as being positive and prices going up as being negative. And to some degree, that's entirely fair. As prices go down, your margins will probably increase, and as prices go up of raw materials, your margins are likely to decrease unless you're able to recover that from the market. But if you look at the price in relation to the market itself, the picture can change. If we now have an accurate market trend that we can compare to, we could argue differently. We can say at the point where your prices are increasing, but they're not increasing as much as a relevant benchmark, you're beating the market. And given that we live in a competitive world, if you're beating the market, that's a positive sign. So you can only look at pricing effectively in relation to what the market is doing. Now, finding benchmarks, of course, is not easy, and so it's not always immediate to find the relevant benchmark, but that's what our system was built for, is to try and help companies find relevant benchmarks, either direct benchmarks or cost drivers or leading indicators. That's what we set the system up to do. And then you get an entirely different picture. You can argue then that if the market is moving down faster than your prices are, you're missing something and you need to push your suppliers harder. But at the point where your prices are going up lower than the market is going up, you're beating the market. So you form a different view on where prices are and also where prices are likely to go. Most critically, it gives you a good sense of when you should be pushing suppliers for price decreases, because they're very unlikely to come to you and offer them unless they feel significant competitive pressure. And of course, in the case where you're able to tender your products every 3 months, that's not an issue. But in some cases, you're not able to tender every 3 months, and in that case, it's good to have the additional information available. And we talk a little bit about different kinds of benchmarks, right? There are generally two types of market benchmarks. There are direct market benchmarks that give you kind of an equivalent product over time that you're buying, or in some cases we help companies set up indirect benchmarks where we track a cost driver combination, and that's the example that I'll show you. Now, of course, it's critically important to realize that cost drivers, that prices are not only set on the basis of cost, but understanding the cost gives you a very good sense of why your prices are moving the way that they are, right? So it's still an incredibly valuable information, because in general, it's either cost or demand that's driving the prices. And if you can identify what the cost element is, you also understand what is the demand/capacity part of what's driving your pricing. So this was the intention of the tool that we built. So if I now go back and look at this, so if we now go back to the private data series where we set up a water-based resin, so these are the prices we're paying for our product. And let's imagine now that we want to set up a benchmark and understand that, right? The first thing we would do is say, well, we're going to set up a benchmark for the water-based resin. So this is our baseline that we're going to compare against, and we're going to set up a water-based resin versus cost driver benchmark. Now, in this case, we're not asked to indicate a currency. We're going to be working in the currency that the water-based resin is in. So no matter what the currency the cost driver is in, the system is going to translate it back to the comparable currency that the water-based resin baseline is in. That's number one to take into account. The second thing to take into account is when we set it up, we're going to set up a value percentage index, which means we're going to say, well, we happen to know that styrene is a key element of this product. We're looking at the European market. We know that styrene is maybe 20% of the value. So that's a value percentage, which means if I'm paying $1 for a water-based resin, 20% of the dollar I'm paying would have been the cost to the supplier of styrene. So let's say 20 euro cents. This index may be in US dollars, but the system will translate it into euros as part of the functionality of this system. However, there's another question we need to ask ourselves: is not only is styrene 20% of the value, the other question is, if the price of styrene were to change today, how long would it be before the prices that my purchase order is being placed in would change as well? In other words, if styrene were to go up by 50% today, how long before I would see that change in my purchase order that I'm placing with the supplier? Is it 1 month? Is it 2 months? Is it 3 months? Let's make it 3 months. So that's a really important consideration. And that helps us to understand the correlation between the products and also the causality between the products. So we use some of that in the statistical analysis. And there's also an averaging option where we say, well, do we want to look at the price of styrene on a monthly basis, or do we want to average it over 3 months to reflect a little bit maybe the stock holding policy of our suppliers and so on. So what effectively we're trying to do is we're trying to model the cost input of the key variable cost of our suppliers, right? And in some cases that requires good understanding of what the water-based resin is made of. In some cases you may have a very good technical understanding, in other cases you may have to fiddle around. Because I know this example, I more or less know what the correlation is. So we'll say acetic acid, 2-month time lag, 2-month averaging, and I'm going to add in DHA again for Europe. I'm going to make this 25% with an average, with a forward option of 3 months. In other words, it's 3 months before DHA market moves, before I see it in my pricing. I mean, I may be into negotiating within 3 weeks, but my purchase orders won't change until 3 months after the market itself moves. I'll set this up to 2 months. So that's me setting up a value index. Now I also could have set up a volume percentage index, and that is only usable if, first of all, if I press confirm, I would lose what I've already set up. It's only usable if you're working in exactly the same unit of measure, which in some cases you are, in some cases you're not. And it will say, okay, let's work out the volume percentages. So for 1 kilogram of water-based resin, what grams are made of styrene, what grams are made of acetic acid, what grams are made of other products. I tend to work in value percentages. It is slightly easier to understand and work with, but in some cases, if you want to do an absolute costing model and so on, you might want to work on the volume percentages. Okay, so we're working with value percentages. The other thing to notice is that on the right-hand side, there's a little quality indicator of the data. Right? So, and if you hover over the Q, it will tell you to what degree the data sources that we use are reliable. Yeah, so A is data is reliable, confirmed sources. In this case, styrene is from C, which means it comes from multiple credible sources, but there are minor inconsistencies between them. In other words, if you find price information on styrene and you look at 6 different lines, they will all 6 move differently, which is logical. At the end of the day, not every line is going to show exactly the same information. If you buy styrene price information from 3 different companies, you're going to get 3 different lines. So we use public information only, but it's just indicating how accurate we think the data is. Right? B in this case is indicating that it's from multiple sources and there are no significant statistical inconsistencies. So they're moving more or less in the same direction. But we can also in some cases have data of quality F, which means we consider it reliable, but the data is anecdotal. Right? And therefore we can't verify it, and nor can we even guarantee monthly input. So there are different levels of data accuracy. Anyway, let's go back to our index. We'll save this, and we get an error, and that is probably because I have logged out of the system. So the system will disconnect itself . Okay, sorry, that's a good point. In this case, because we're using old data, we have to set the index date to be in line with that data. And I'll come back to that in just a moment, because that's an important point. So I'll come back to the index date. Anyway, let's continue with the example, and then I'll come back to what I just changed there. So I've got the value formula set up, and now the system is starting to look at the correlation. So first of all, it gives us a correlation based on history between the water-based resin prices and the weighted average of the 3 products that we've indicated as being part of the variable cost drivers. So that will look a little bit, so if we look at it in a little bit more detail, in red we can see the prices we're paying. And the colored lines are the ingredients that we've indicated are the critical cost drivers, and the light blue line is the weighted average of the cost drivers. And now the system is looking at whether the prices we're paying is moving more or less in line with the way the cost drivers are moving. This is another way of presenting that, which is saying, well, to what degree are the products moving in a similar fashion? Right? And the statistical tools that we're building into the system are going to get increasingly sophisticated to help companies understand what is the relationship between the cost drivers, or in some cases the direct benchmark, and the baseline that they want to understand better. So given that information, we have a high correlation, and then we get to this chart. So this chart now is showing the red line, which is the prices that we are paying for a product, and the light blue line, which is the weighted benchmark of the critical cost drivers. So in the ideal world, if the data is perfect and the model you've built is perfect, and your prices are always following the cost drivers, the red line would be right on top of the light blue line. Of course, it rarely is. And what you're starting to see now is the gap between the benchmark you've set and the prices you're paying. And that gap can be measured. And that gap is effectively whether you're under or over the cost drivers that you're indicating as being the benchmark that you want to measure yourself against. Now, having said that, it's critical to remember that this is a fine-tuning process. You rarely start and get it spot on the first time. You fine-tune your understanding of the market, you fine-tune your understanding of what makes a good index, you fine-tune your understanding of what the best data sources are. It's a journey. The only good news about the journey is at the end of the day, you get to somewhere meaningful in almost every case, because you learn to understand what's driving the prices of your raw materials or your inputs, or in some cases, companies are using it as leading indicators for what's driving their sales. If they're selling a certain product, they learn to find correlations between market indicators, also with a forward month's leading indicator, and their own sales or their own volumes and so on. So the system, eventually you become extremely good at identifying what's driving your costs, or what's driving your sales, or what's driving your volume. But it's rarely accurate the first time. The example I'm giving you, of course, I know it works well because I've used it before, but it's not an easy process, but it makes you ask the right questions. Now let's talk a little bit about the index date. As you can see, the index date is the date on which I set all the lines to be equal to 1. So I'm indexing all the costs, because if I showed them at cost level, it would look more like this chart, right, where you can see the prices you're paying over time, and you can see the summary of the cost of the raw materials. And it's also a useful chart. It's visually nice. You can see how they're moving together. You can see that they have a similar structure. But what this chart shows you is them superimposed on each other. And normally an index date would be set on the date when you did your last really big negotiation, because it is from that date that you reset your indexing, where you say, okay, I've adjusted my pricing, they are now again in line with the cost drivers. And the error I was making before is that I was trying to set the index date for January 2022. But the example I'm using, I don't have prices for January 22, so the system was giving me an error on that. And that's why I reset the index date to be more meaningful, maybe just before the the COVID crisis, which is probably a good date to set it on. Now, I briefly spoke about the gap between the prices I'm paying in red and the benchmark in blue. We can measure that gap. And that gap is being measured here. So what we're looking at here is the gap between the baseline that we are paying in terms of price and the benchmark we're using. And what this line is telling me, so as long as that gap is moving within the two green lines, it's within normal statistical variance. In other words, you wouldn't expect the prices to be adjusted because it's kind of within normal variance. The moment the black line moves above the green, the middle green line, you would be expected to push for a price decrease. In other words, the cost drivers have gone down, but your prices haven't followed. So you can see it happening during the COVID crisis. Of course, all the cost drivers went down. But it wasn't a good opportunity to get price decreases because it was anyway difficult to get products onto a ship and get containers and get access to. The world was kind of half shutting down. But anyway, that's what the message is showing. If the black line moves above the yellow lines or below the yellow lines, it means a price change is imminent. And if it is above the center, you should be pushing for a price decrease. If it is down below the center, you should be aware that a price increase may come soon. So if the supplier is calling you, don't pick up the phone and consider placing purchase orders while your pricing is at the level. Right? So, and this chart tells you what the price increase or decrease would be given what the cost drivers are doing, and of course on the assumption your model is correct and the data is correct and so on. So the fine-tuning process is really important. So that's a little bit what this chart does. I've talked briefly about this kind of cost overview chart, which is relatively self-explanatory. You can see what the products is made of. Of course, there are options if you want to make the model more sophisticated. You could add electricity into it. I said, well, I happen to know 6% of the cost is electricity. There's a 2-month lag. I want to build electricity into my model, so you'll get electricity built into the model, and all the correlations will change slightly and so on. So it's kind of a visual view. It also gives you a feeling, or it starts to give you a feeling for the margin that your supplier is making. And you can get crazy sophisticated on this. If you really want to look at an accurate model, there's a lot of ways you can do that, or we can support you on that, but in general, we would show you how to build those models with help. The other things on here maybe to mention is the data itself, which you can of course download. Interesting enough, you can also share the analysis with people. So if you wanted to share the analysis with others, you would put their email address. Now, what they could now do is they could log into Business Analytiq and see everything that you've shared with them. They cannot change it, but they can see it. So they can see the correlations, they can see the detail, but only of the one you've shared with them. And the good news is they do not need to have a subscription to Business Analytiq. The email address needs to be a Google registered account, but they do not need to have a subscription. They can see this without a subscription. So for example, if you wanted to share it with a salesperson or your boss, or even with a customer or supplier, you can do so over the internet, share it with them, and they can see the analysis. They can't change it, but they can see it. So that's the option of sharing. A few other points to mention is that, again, you can put comments in to kind of report stuff, and you can also limit the chart range. In the detailed chart, you can also add other lines that you want to add in to the chart if you think that's relevant, just as a reference point or so on. So you can do a little bit more with that. You can export the data to a CSV file. You can also go to overall to my benchmarks, and besides filtering, you can also download all of your indexes in a format that then you could easily upload into Power BI, or it's an Excel file, so whatever you want to do with that data, you can play with it. It's relatively quick to set up the benchmarks. It's a bit of a skill to learn to interpret them, but kind of that's what we're here for as well, to support you on. All right, that's my benchmarks. I think that is largely it. There's also a support section where we will load all the support videos. I mean, there are separate videos on my data series, my private data series, my benchmarks, my indexes, how to share, how to encrypt, and we will continue to add videos to help you with analysis. The tool is constantly being developed, so these are still very early days. We're looking at adding modules for forecasting, we're adding modules for additional statistics to help people. We have to get them right. So they're pretty important developments coming up. Yeah, and I think by and large that is what the tool does. That's a brief description of how it all works. If you have further questions, there's a get in touch page on my website where you can reach out to us and we'll try and answer all your questions. Thank you for paying attention, and maybe I should briefly talk about the offering that we have. So I forgot that. Okay, so if you're interested in the tool, you can log on online. For $300, $299 per year, you get a full subscription to all the data and all the tool. That price is valid now. As we develop the tool, that price will be going up. So if you see this video and the price is high, that means the price has gone up. You get a 30-day free trial, so you do not get charged for the first 30 days. You can opt out at any time, no questions asked. We don't charge you. If you opt out in the first 30 days, you get full access to the system for the first 30 days. And the other thing we have on the pricing is our price guarantee. The moment you sign up, if you continue your subscription, we will never increase that subscription. So if you sign up for $299 per year, and in future it's going to be $1,000 per year to sign up, we will not increase your subscription to the $1,000. You keep paying the $299. You get the benefit of all the additional tools and data that we will be including. And so there is a price guarantee. This is not a game where we take away your access or your functionality. We do not reduce your functionality in any way, shape, or form. And we will never increase your subscription once you've signed up. So that maybe helps with the decision making. Again, if you have any questions, contact us at support@businessanalytiq.com, send us an email, ask for a private demo, etc. Thank you very much for your time and attention.